Hey everybody, welcome to today's webinar. We're going to get started. I see some familiar faces on the call, so thanks for joining us. I also see some new faces, so this is great. All right, I am going to just, for those of you who are new, and for those of you who are returning, I apologize for the redundancy, but for those of you who are new, I'll just quick introduce myself. My name is Tom Meckey. I'm the Vice President of Sales and Business Development at Onward. I've been in the real estate industry for quite a long time, and my role here is to lead our partner agent program. So really working as an evangelist for our solutions to help agents apply that to their business. And for those of you who haven't worked with us before, we are a financing company with both traditional mortgage offerings like conventional loans, along with some proprietary products that help people move more easily, and we'll get into that today. The topic of our discussion today is how to differentiate offers to compete against cash. Obviously, we're experiencing one of the tightest real estate markets we've seen in over 20 years, and it's really challenging out there. We hear a lot of stories from our real estate agent partners about listings getting multiple offers that are going, way over asking price and things like that. And so I wanted to have a conversation today about things you can do to create offers that stand out. Also, ways to structure your offers so that you have a better chance of positioning your clients for winning. So Onward Financing exists to change the real estate industry and how people move. One of the challenges that we're seeing, especially in a low inventory, high demand market like the one we're in, it's very, very challenging for people to, hang on, I'm going to admit one more person here. It's very difficult for people to move when they need financing in order to transact. If they have properties to sell or if you're going up against cash. And so what Onward has done is we've created value in the marketplace by creating liquidity for homeowners so that they can move simpler and easier, and also by making them more competitive. Okay, we partner with real estate agents because this is a complex and complicated transaction, and we truly believe that real estate agents should be at the center of it. And so it really is important that we work with good professional real estate practitioners. So let's just get right into, what are competitive offers looking like in today's market? Obviously, the most obvious answer is, high over the asking price. I recently pulled some data points out of InfoSparks from the North Star MLS. So obviously, going way above asking price, removing contingencies, showing proof of funds, and also, the personal touch, building the relationship with the listing agent if you're a buyer's agent. Those are the types of things that we're seeing that agents have to do. And we're also experiencing this ourselves. That's often not enough, right? So what can we do to better prepare our clients? So right now, I really feel like it's important to inform your buyer of what the market looks like. As I was talking about before, I took a look at InfoSparks, which is the data analytics tool from the Minneapolis Association of Realtors. And if you look back over the last 90 days, and you look at percentage of list price that homes are going for, in certain markets, you're seeing up to about 106% of list price. So we kind of know that while it's obvious that people have to go in over asking, it's sometimes a challenge to know, well, how far we're asking, right? And so working with people to help them understand the market conditions, using those statistical and analytical tools to help them understand that, but then also really reviewing all of the financial scenarios that are available with a qualified loan officer, understanding a buyer's limits, whether it's their assets, their debt to income ratios, things like that. Those are all very important things now more than ever to position people to win. And finally, build a compelling story, right? The icon for the tacos is there because I saw a meme on a sign that somebody was offering a year of free tacos at a restaurant if their offer got accepted. And you know, you laugh at that, but it's actually, you know, we're seeing things like this in the marketplace. Some other things that I'm hearing from agents in terms of, you know, how you can structure offers to be more competitive and keep an eye on, you know, not getting the purchase price so high that a property might not appraise. So I'm hearing stories of buyers offering to pay listing agent compensation or the listing compensation, or buyers offering to cover the seller's title costs or the taxes associated in a transaction, you know, other things that aren't part of the purchase price, but are a net positive to a homeowner or to a seller. So we're seeing all kinds of creative things. I'm hearing about them in mastermind groups with other realtors. And I think those are all really effective tools that you can apply in addition to having, you know, a really good financing partner in place. Partnering with your lenders has never been more important. For no other reason than just to review all the options. There's a ton of options in the marketplace. There's iBuyer solutions where you know, you can, you know, get people instant offers on their homes. There's deferred payment scenario plans so that you can make cash offers. There's all kinds of things out in the marketplace. And so those are important to sit down and discuss with your clients. Also, having a plan for appraisal gaps. We're really experiencing this quite a bit, where having a good solution for if a property doesn't appraise and how to keep that transaction together. Sitting down with your clients on the front end and walking them through these scenarios is really a best practice. And if you missed our last webinar on having an appraisal gap strategy, we could probably post a link to that. It's on our blog, on our website, and we could probably post a link to it in the chat. But I would encourage you to go take a look at that. We have found that is a really, you know, there's a lot of really effective appraisal gap strategies by implementing certain tools that lenders have access to in order to help offset or overcome those obstacles in a transaction. And then, of course, you know, the basic, the real estate 101 is get your financing secured before you start shopping. What I had always liked to do when I was actively selling was, you know, make sure my client, you know, was fully approved. What does fully approved mean? It's not just a pre-approval letter where they filled out a loan application and had their credit score pulled. You know, work with a loan officer, make sure they, you know, put that borrower through automated and underwriting and you know, get a list of conditions back and make sure that they can verify that what the borrower put on the application can actually, you know, they can actually deliver that information. There's a lot of self-employed people out there, for example, that'll say, hey, you know, I make X amount of dollars per year, but then when you look at their tax returns, that is not an accurate portrayal. So really making sure that, you know, the lenders are doing their due diligence and really have them locked in. The other thing too, like if, you know, with regard to, you know, what price range you're going to show buyers homes, right? If somebody's approved up to 500,000, right? That's the max loan they can borrow, for example. It's probably going to be a really good practice to be showing them homes in the 425 to 450 range, knowing that they're going to have to bid their offers up, right? So having those conversations on the front end is really important. So educating your buyers, right? There's traditional financing programs out there, Fannie Mae, Freddie Mac, conventional financing. There's cash offer programs, there's rent back solutions, there's deferred payment financing. I talked about that on the last slide, and iBuyers. There are a lot of options out there for people to be able to try to differentiate themselves. What I can tell you from personal experience most of these programs are fraught with risk to the borrower, to the consumer. Cash offer programs are dangerous if you're not having the proper consultation with the homeowner. All right. How a lot of these cash offer programs work is you'll have a company that will go in and they'll buy the property for cash, and they'll potentially offer more than what somebody can get approved for financing for. And if they close and do like a rent back solution, for example, in the current climate that we're experiencing right now, these rent back solutions I think they're dangerous. And the reason I think they're dangerous is, somebody's approved at a rate today, and then they use a cash offer program where they're going to close with somebody else's capital and then rent back until they can get their financing in place. But we're in a rising interest rate environment right now. So that is not a great solution for someone who's already buying at the top of their budget and then running the risk of not being able to lock into long-term financing. All right. There's deferred payment financing. Basically what that means is, they're buying into a property and they don't have payments. They're basically deferring payments until they can get their departure home sold. Well, again, that costs a lot of money to the consumer. So what ends up happening, what we've seen, is they end up getting higher interest rates than they would have gotten had they just been able to go with a traditional program and lock into their long-term financing. And then finally, there's these iBuyer solutions, right? So you've heard of Open Door, you've heard of OfferPad, you've heard of Zillow Instant Offers that's no longer operating. Those are just incredibly expensive, right? And Open Door has announced that they're working with agents and things like that. But at the end of the day, I mean, we've seen it's cost a homeowner anywhere from 12 to 15% of the equity that they've built up in their home. So if property is worth, $500,000, they could be leaving anywhere from $50,000 to $60,000 on the table or more potentially by working, with an iBuyer solution. And it's just not necessary. The reason they're doing it is to free up their, one, convenience, two, freeing up their equity so that they can, buy a new home non-contingent. So I just feel that there's better ways of going about that process and accomplishing that. So some principles to abide by for your clients. One of the principles that we live by at Onward is preserve a homeowner's equity as much as we can, right? We want to be cost efficient in helping people move, all right? Two, reduce the risk of losing a house, right? So we've talked earlier about the transaction challenges that we're having today in a tight market. Creating buyers that represent low risk to a seller is what we're trying to do, okay? Finally, ensuring that the option is simple and easy to understand. In the last slide, all the different programs that are out there, they are very complex. They are very complicated. They don't need to be that complicated. And finally, setting the clients up to win, but not break the bank. And we'll talk about that here in a minute. But these are the principles that we operate by at Onward, and what I'm finding is our real estate partners that we've been working with share those same principles. So let's talk about preserving client equity. All right, Onward is very cost efficient for buyers. A lot of our costs are offset by what we enable people to do with their real estate agents. One of the best things that we've seen in all of the programs that we've done for people over the last year, or last couple of years, I should say, is that we've enabled people to move first. So why is that important? The reason it's important is because it enables the real estate agent to execute a best practice when listing and selling a home, which is to properly prepare a home for sale. It's easier to stage a home when no one's living in it. It's easier to show a home when no one's living in it. But the problem that has always been that traditional financing has required people to sell their home first in order to transition, all right? Unless you qualify for 2 mortgage payments, which most people don't. So if you compare the costs of our program versus some of the other programs out there, whether it's our MFM, our Mortgage for Movers program, which is very much like a bridge loan, or our Assured Close program, which is a cash-backed program. And I'll talk about that more in a minute. They're very cost effective when you compare what we do to the other options that are available. For example, the selling first is expensive, right? You put your home on the market, you get it sold, you don't have a destination home that you're going to, so you have to find a temporary housing solution. You have to potentially put, all your stuff in storage. You got to incur 2 sets of moving costs because you're moving stuff from your house to a storage unit, and then from a storage unit into a new house when you find one. That's very costly. iBuyer programs. I mean, obviously, in order for Open Door to come in and provide someone the convenience of selling their home instantly, there are going to be costs associated with that, since Open Door is going to put that property back on the market and sell it. And then finally, the cash programs. There's just no free lunch, right? So, everybody has got to, find a way to be profitable when executing these programs. Our Assured Close program right now is probably the most relevant product in the marketplace. And for those of you who aren't familiar with it, I know some of you are joining us a second and third time, but some of you are new. What the Assured Close program is, it is a cash-backed offer. It enables you to remove a financing contingency from a purchase offer should you choose to do that. It is winning in bidding wars. It turns ordinary buyers into risk-free cash equivalent buyers. So what it is Onward gets a buyer approved for traditional Fannie Freddie financing, right? But what we also do is we back them with our private capital. And the analog that I guess I could give you is, if you've ever seen an approval letter that has the $10,000 guarantee, we'll close on time, or we'll give the seller $10,000. It's very much like that, except instead of coming to the table with $10,000 or $20,000, we're just coming to the table with all the cash needed to close that transaction. There's 2 applications for it. One is just, making the buyer more competitive and reducing risk for a seller. The second application is if you need to close in less than 30 days, right? Let's say the seller wants a quick closing, 21 days. Oftentimes it's really challenging to get traditional financing done in less than 30 days. So we can bridge that gap and then put someone into traditional financing after that. So that's how it works. The benefits of our Assured Close program, obviously people are qualifying for their conventional financing, but again, coming in, if you're going up against cash, you can position this as like cash. And fast closings, there's no gimmicks, there's no weak guarantees, there's no fine print. We show up with the cash and guarantee that close date. All right. So how does the Assured program work? So like I said in the last slide, there's really 2 scenarios. You're going to use traditional financing to close, right? And then you're going to use Onward's Assured Close loan as a backup. So you get your offer accepted on a house, and you're pushing your close date out 30 to 45 days to close on the home with traditional financing. So what we do is when you make that offer to that listing agent, we'll make sure that our program is properly explained to the listing agent. We'll have one of our lending advisors on our team contact the listing agent and walk them through it, make sure they totally understand how it works. And it's really that simple. And then using the Assured Close program to actually close. So like I said, let's say it's important to a seller that a short closing or escrow period to win. We can do that for you. All right. And then in this second scenario, what we would do is close with private capital and then just refinance the borrower into their permanent long-term financing. All right. So let me talk about a real life example, a customer success story that we had in the fall. Gus and Peggy were relocating here from Idaho. They had their home sold in Idaho and it had a close date scheduled all the contingencies were removed, and they were here looking for a home with an agent from Edina Realty. They found a townhome listed in Woodbury that was $275,000. And it was in multiple offers, and we were able to help them win. And they only offered the list price. They didn't have to go above asking. And the reason why they didn't have to go above asking was because they showed up with our assured close approval letter. And they, so they were able to access, our private capital to be able to close. And then when their home sold and closed and freed up all the equity, we were able to plug that into their conventional financing. And the seller felt great about it because they knew if there's any issues with that conventional financing, Onward was there to backstop them with a private cash. All right. And, one thing about this one particular transaction, it really operates like a safety net, if you will. Obviously, what's best for the homeowner or what's best for a buyer is to lock into their long-term financing at the date of closing or shortly thereafter. And this particular transaction, there was an issue with the homeowners association not providing the proper documentation on their insurance policy. And right up to the day of closing, now through no fault of anyone involved in the transaction, the real estate agent, the seller, or the loan officer, it was really the HOA manager not providing the proper documentation on the insurance. And that could have caused a delay in getting the conventional loan closed, right? So what would have happened in the event that wasn't going to work, we would have just funded it with our private cash. But our loan officer was able to work with that homeowner association manager, spent a lot of hours on the phone that day, walking them through the documentation that was required and getting that over to the closers and the underwriters from on the conventional side in order to make sure that all the conditions were satisfactory. So just another example of the importance of the collaboration between you, your client, your loan officer partner. Okay. So how to succeed right now in this market to help your clients. I think obviously you got to create a team that's really focused on being buyer centered. Okay. It's probably the worst time I've ever seen. I've been at this for almost 20 years now. It's the worst time I've ever seen for buyers in terms of what they have to go through to get a house. So creating a team of, a lending partner that has solutions that can help you differentiate yourself to win, but also, all your other partners, your title closers, your homeowners insurance partners, your home inspectors, everybody has to work together to really be focused on that buyer and what's best for them. And then collaborating with the listing agent. You don't want to create adversarial relationships with the listing agents. I've seen a lot of agents do some pretty cool things in terms of how they present offers using video and really sending a bomb email or something like that, where they're walking a seller and their agent through the offer, terms and conditions, things like that. Just anything you can do to set it apart, I think is really important. Leveraging your buyer's current home, right? So being able to access the equity without having to sell it first is key. It's absolutely key. I haven't seen a contingent offer get accepted in months. So having solutions for that is absolutely important. And then finally, the Onward Promise, what our promise is, our service promise to you as agents. We're going to continue to innovate, and we're going to continue to offer products that enable people to move simpler and to do things that they couldn't do before. And our goal is to help you serve your clients better. We want to continue to earn trust on every transaction, and we want to continue to add value to your business instead of asking you for a piece of it, right? I mean, I know when I was actively selling as my primary, my primary job, I always got calls from lenders who were always just, they just wanted the referrals. They wanted the referrals, not bringing, not really bringing any value. And I had a lot of great lenders that I worked with, as I'm sure many of you do, but they all sold the same products, right? They all sold 30-year fixed, 15-year fixed loans. They weren't really offering solutions that actually helped me build my business. And when I came across Onward in 2018, this was a lender that really had creative solutions that helped me win, right? Back then, I had 3 clients that were sitting on the fence, all had homes to sell, wanting to buy, but just didn't think they could. And through Onward's Mortgage for Movers program, I was able to sell 6 homes that year that I never would have gotten done without their solutions. So it really is, I believe, it's funny. It's like, I believe in the company so much. I'm at a career change, and I came over here to like spread the good news. So what I would say is, in looking at us, we're very, we have all the same products that every lender has, right? We have your traditional financing solutions, but we also focus very much on creating products that help people get to where they want to go. So with that, I'm sure some folks will have some questions on either our MFM program or our Assured Close program, and I can open it up for questions. And if anybody has any comments on what you're doing to win in today's market, please feel free to share, because this is meant to be kind of a mastermind session, an interactive session. So if you have anything you'd like to add, I'd love to hear it.
Hey, thanks for getting this together. It's great material. And I'm just I'm working with 4 buyers right now, and it's been, as you said, it's tough out there. Lost a couple. I've won a couple this year too, but it's only when the buyers are willing to, put all the cards on the table and push all their chips in, it seems. And I'm trying to set them up with a, better solution up front, which is why I'm checking Onward out. But I'm wondering a couple of things. If you'll bear with me, I've got a couple of questions, and if I'm getting too long, and someone else wants to jump in, go ahead. But my first question is there anything different for first-time home buyers? So is the product different? Is there an additional cost associated? I mean, if you're providing this solution where they can pay with cash, how does Onward do that? Is there like an additional percentage point on the loan or something like that? Or is this just provided as an additional service with a traditional cost structure of a 30-year, for example?
Sure. Yep, that's a great question. So yeah, there are some fees associated with it. And what we'll do after this is we'll email out to everyone on the call. Obviously what we're doing is we're putting them into their long-term financing, right? So what we're doing is we're backstopping them or providing us, with cash. So how Onward obviously makes money is, we're a mortgage banker, right? We're a full correspondent mortgage banker. We have wholesale lenders that we work with, and the ultimate goal is to get people in their long-term conventional financing. So that's how we earn our revenue. Okay. We've created this Assured Close program so that we can use our private capital for good to help people be differentiated. Now, if they end up having to take the private capital, that's where the fee structure would set in. All right. The cost to get approved for that is $495, and which is in addition to all the regular closing costs that a borrower would incur for a conventional loan. Does that make sense?
Okay, great. My second question is, do you have materials, a PDF, a video to quickly explain to listing agents what these programs mean? Because I've been through your website and I've looked at things, and I'm just, if we end up using you on a transaction, the listing agent is going to have questions. When I send over a pre-approval letter from Bell or you know, any one of the local lenders, certainly, and some national lenders. You know, there's going to be some comfortability with that from the listing agent side, but I hadn't heard of Onward until recently, and I've been in the business 19 years now. So I'm trying to anticipate resistance or skepticism on the listing agent sides, and just wondering what you have in terms of materials to kind of bridge that gap and get them comfortable.
Absolutely. That's a great question. And yeah, it's a very fair question. So Onward's been around, you know, since 2018 and really got established and got going. We were a very small operation here. We're based in Minnetonka. We're local. And we do have materials that we can provide you that will help listing agents be more comfortable. But one of the things that I would just like to highlight is it's a standard operating procedure for all of our lending advisors to call listing agents and walk them through your offers, your buyer's approval letters, right? Especially if they're using one of our programs like our Mortgage for Movers program, which is basically, you know, it's like a bridge loan, but it's a bridge loan with no interest rate, no payments. And what we do is we pay off someone's existing mortgage and allow them to leverage the equity in their existing home so that they have down payment resources and get them approved for purchase money mortgage without having to sell first, right? So we do a very good job of walking people through the mechanics of that, right? And why they're not contingent, right? So someone's making an offer, it's not contingent, you know, upon the sale of an existing home, but they have that existing home. So they have the approval letter from Onward that states that they are approved to purchase without having to sell their existing home first. And then our loan, we like to call them lending advisors here versus loan officers, because our team really does a great job in advising people through all of their options. But they do a great job of you know, reaching out to listing agents and helping them get really, really comfortable with, you know, what we're doing and who we are. All right. And the professionalism just comes through. In fact, the example that I discussed earlier, you know, the folks that relocated here from Idaho, the loan officer was Katie Gagne. Katie built a great relationship with the buyer's agent, and then she ended up building a really great relationship with the listing agent and really got the listing agent comfortable with her clients. And I would like to highlight, their offer was not the highest offer, right? Their offer was the strongest offer. So it's not, you know, when you're looking to make your offers stand out in a market like this, it's not always the price, right? We know that. So really working collaboratively with everybody involved is what we pride ourselves on. But yet, to answer your question, yes, we have materials that we can share with you.
Great.
And we will make sure we do that today. Thank you for asking.
Great. That's it for me for now. Yeah.
Okay. Anybody else have anything they'd like to add? Awesome. Well, hey, thank you for your participation today. I really appreciate it. You can email me at tom@onwardfinancing.com. You could call me on my mobile, 612-327-8303. I'm happy to field questions that you have and get you connected with some of the loan officers on my team. And I really appreciate everyone's participation today.